What's up, guys? I'm Cade Fisher with FullyFunded.io. Listen to these investors tell you how I got them 150K plus in funding at 0% with no bank statements, no tax returns, no P&Ls, just leveraging their personal credit and their LLC. So I'm here with Miss Janice and Moto. I've known Moto for about a year and a half now, and I just helped him and his family. I believe we got about $213,000 in total funding. 163,000 of that was at 0%. So I'm just going to kind of talk to them about what they plan on doing with the money, how they're going to use it in their real estate journey. So
I'm Moto. I'm a sub-2 student. I follow a guy named Pace Morby. That's how Cade and I met about a year ago. And I've been doing real estate and investing for about 18 months now. And I've known Janice my entire life. She's my mother. And also the general partner for Tranquility Financial LP, which is our family's financial apparatus and real estate investing mechanism.
Nice. So what would we do here? We got funding. How did we go about getting this funding? How are you guys planning on leveraging it? You're planning on buying 2 RV parks, and then you also have 2 houses in Tulsa that you are renovating, or you already renovated.
We've renovated one completely, and that was very helpful to have the funding to be able to do that as well, and not actually have to draw from the corpus of what.
Draw from like cash,
right,
cash
exactly.
reserves.
And you were there yesterday. They're looking.
We were there yesterday. There were,
great.
one is looking really nice. It's totally completed. The smaller of the 2, the larger of the 2, we still have a little work to do on, but that is proceeding. Let's just put it that way.
Nice.
And it's a much larger house, a little bit more involved in what had to be done. So, but we're looking forward to seeing it finished and seeing it online. And thanks to Cade.
And I'll tell you, with the little bit of time that I've spent in real estate so far, the most valuable commodity most of the time is time itself. So, the real estate journey is a learning process. As we acquired the properties and started our renovation, I learned about a cool down. So for real estate students out there, whenever you renovate a property, you can then on the backside re-leverage the new value from your lender and take your LTV, your loan to value, back to a higher ratio. What I didn't know at the time was that there is generally a 6-month cool down from the purchase of the property, because if a lender is going to reevaluate the property, that market strength of the strike price will stick for about 6 months, and then they will reevaluate it. So for us, there was a length of time even after we finished most of the renovation, but then there was still additional time for that cool down before we could go and re-extract the capital that we had invested in the property. So when you ask how we used the leverage that you gave us, because it was 0% for a longer period of time than we needed to get our money back out of the property, it means that now we have 2 renovated or very close to renovated properties that are ready to rent out and cash flow, and they will command a higher price in the market because they are much nicer properties now. But thanks to the lender that we're using, shout out myinvestorloan.com, we will now have all of our funds and everything back. So we'll have our credit lines restored, but the properties will be cash flowing and are worth a lot more today than the day that we bought.
Yeah, and that's the whole goal with like real estate. You take the money and go make more money with it. That's exactly how I used to use it. And with the 0%, most of this was on average, it was about, we did a lot. We did some of it was 12 months. Most of it was actually 18 months, 0%. Say it took you 3 months, 4 months to do these renovations. Now they can go leverage that, 0% for 18 months and go do more renovations on other houses. So you can do it, 3 or 4 times before you actually get hit with the interest.
And I'll tell you, one of the things that was really impressive about the process early on was if you have decent credit, the first bit of funding was quick. There were no documents that were needed. So when you see at fullyfunded.io, Cade tell you he can get you funding without P&Ls, tax returns, etc., that is the truth. And the initial amounts were definitely enough for us to achieve the renovations. But the amounts that you have gotten us to now as our funding director for Tranquility, we could actually purchase an entire property and then carry 0% for 18 months even on a smaller duplex or something and cash flow it in the meantime. So now, the wheels are spinning for us and we're trying to look at how best to utilize our leverage over that time frame, but to make sure that other people get as much value out of this as possible. Let's take a few steps back, because there were some initial adjustments that we needed to make to our credit profiles or our utilization to make sure that we got the best response from these institutions. Yeah. Tell us about some of the things we needed to do and the common things that people might need to look at to increase their chances of getting to this 200K.
Yeah, so the first thing I look at, well, can I explain how this works? The simplest way of putting it is you're leveraging your good personal credit and an LLC to go get funding on the business side. That's the simplest way of doing it. And the benefit of getting funding on the business side, the 0% business credit cards, is they don't report to your personal credit. That's a benefit because a utilization plays a huge factor, in your credit score, in your credit. So if you, go max out your personal cards, then your score is going to tank. And then lots of times lenders don't want to approve you because they see that you're overutilized on the personal side. So keeping it separate, personal versus business is huge. But before we went for funding, what we did was I review everyone's credit profile, make sure that they're optimized, because these lenders are looking at specific things as far as getting the best results. So one of the things we did was pay down some utilization on the personal side. Generally, most lenders want the utilization below that 30% mark to get those approvals.
I'll take a moment to save someone else some time or trouble. We found this out because when you're thinking in a conventional sense, or like most of us have been taught or accustomed to finances, you think about amounts more than utilization. So there was a much smaller personal card that we had that was just overutilized a little bit. And so it actually took us 30 to 45 days to recover from a report that went in where we had a smaller card we weren't thinking about that was just slightly overutilized. Yeah. And so it is a live situation with your credit profile, and having someone like Cade that knows how to massage it for the protocols on the other end with these banks is invaluable.
Yeah, and Janice and Ray, they had outstanding credit profiles to begin with, though. So normally, depending on the other clients, you might have to do some more optimization, but really, there wasn't a whole lot to do because they've done a great job over the years with their credit. I think they both had, 800 plus scores. So really, the main thing was just knowing which banks to leverage, which ones are going to get the best terms, which ones to apply to, what inquiries are going to be pulled.
Were you surprised how easy it was maybe? Because you've had relationships with banks, you've gotten loans, we do some insurance policies and things like that. Were you surprised how simple it was for you with good personal credit to get 0% funding for business credit?
Pleasantly surprised in one respect and then not in another, if you know what I mean. That's why you work all your life to have good credit. And you think, well, geez, it finally came back and did something for me.
Yeah.
So that it was so non-confrontational was not really the right word, but it was easy. Yeah.
Yeah.
Cade made it very easy.
Most people don't even know this is a thing. Like this is an option.
No, we were used to the way we were raised in a different era of financing.
Yeah.
How things were done. This is totally not what was in our wheelhouse. And at first you are a little apprehensive, but it works.
Yeah,
so like what you showed us, it works.
I was raised on Dave Ramsey, pay everything with cash and everything. So don't ever, touch a credit card. But this is a little bit different. That's still the truth with Dave Ramsey. You don't want to go rack up debt on your personal credit if you're using it for the wrong purposes. But if you're using it in something that, if it costs you $1K to acquire this money and then you can go leverage it and make $5K or however much, that makes sense. So that's kind of the whole idea, is leveraging this money to go make more money with it. And if you're doing it that way, that's a smart way. And it makes sense to go in debt because it's good debt.
And I was surprised with how much time we could have access to that rate. Having 0% for 90 days or 6 months to get someone into their system, that I understand. But
Yeah.
even some of the insurance products that we leverage, our money becomes interest bearing after 12 months. So for us to have 0% money for longer than that 12-month period, that's something that we're still trying to adjust for and incorporate because it just doesn't make sense the way they usually think about money. And I know one of the big questions that we had along the way was, okay, well, we get 0% for the 12 months or the 18 months, but then what do you do at the 12 months or 18 months? Now we're going to reclaim our capital from what would you normally tell someone would be a good course of action at that time?
So, I mean, what I always tell people is obviously the goal is to take that money, go leverage it, make more money with it, and have a plan to pay it off before the interest hits. You don't want to be stuck paying interest. Have, say your highest card on the personal side is 1K. And on the business side, you're going to get real low limits, like 3K, 4K, and you're not going to be happy with the results. So you want to ask for credit limit increases over time. Try to get at least one card with a 10K plus limit on the personal side. That way, the lender, when they check your credit profile, they can see, okay, Moto or Janice, they've been trusted with this much, so we'll give them more on the business side. That's a big thing for the business funding. The other thing is having different accounts, whether it's having a mortgage helps, having an auto loan, personal loan, stuff like that, just different forms of credit. Inquiries also play a big role. That's something we didn't have to do in this situation, but a lot of times we have to remove inquiries because once you get more than 3 per bureau, that they call it credit seeking behavior. So the lender looks at you like, okay, well, you've been applying to all these banks. We don't want to give you money because it looks desperate is essentially what they look at it as. So we can get those inquiries removed oftentimes. Another thing is just, average age. Sometimes you might have a younger average age. A big way to leverage that is, say you have a parent who has, really good credit. You can ask to be an authorized user on their credit profile or their credit card, and you can pretty much steal their history from that card. So say it's a 10-year, 20-year-old card, you have them add you as an authorized user, and then you steal their age. That shows up on your report. So that increases your age, which helps you get higher approvals, get more approvals as well. Overall, that's I look at about 10 to 13 different things over on that credit profile and see, hey, we need to optimize this. This needs to happen before ever going to a lender. That way you have the best chance at getting the approval, the best rates, the best approval results before even applying. Because most people, they don't really know what to look for, which is fine. And they just apply and then you say they get denied. The banks, they give several different reasons that don't really make sense a lot of times. Very vague. You can't pinpoint what it is. Oh, okay, I need to change this, I need to change that. So it's kind of helpful, knowing exactly what they're looking for. I guess question for you guys, what would you guys, tell someone who has good credit and doesn't know this is an option? I guess what would you tell them? Say they're in real estate, say they're an entrepreneur, say they want to start a business. I guess what would you tell them as far as getting started?
Make your credit work for you.
It's your biggest asset, honestly.
I'll speak to what I believe is everyone's biggest limitation. And this is probably at tiers all the way to legacy. Mostly, I have seen that it is self-belief that limits people when they're trying to break a ceiling or achieve something. I think if someone will go to fullyfunded.io, if they'll schedule some time to talk to Cade, if they'll watch some of your videos and understand some of the education that you're putting on your social media every day for free, I think they will understand why this makes sense for the institutions, why this has been used to leverage the largest economy in the world. Because while I will also not argue with the Dave Ramsey mentality, you can also not save yourself wealthy. So if you are wealthy and you want to stay wealthy, maybe the Ramsey protocol is for you. If you're not wealthy and you're trying to I don't know that that is the approach.
People, they might walk into a bank and try to get a business loan of some sort. And the bank, they want to deal those financials. And if you're a new entrepreneur, a real estate investor, a lot of real estate investors, they write off that they take a loss in taxes because they love saving money, not paying taxes, which is fine. But the bank looks at that and they see that you don't make any paper, so they don't want to give you, a business loan. So you can have a brand new business and say you project, say you're going to make 430,000 in revenue this year. You can write that on the application and project that, and the bank is totally fine with that because it's a new business. They get that. You don't have financials yet. Just kind of knowing that as far as which banks to apply to, which ones, I guess, are fine with the projected revenue. I mean, I guess other question I had was obviously everyone, watching this isn't going to have outstanding credit, good credit. And that's, that's the case with a lot of people I talk to. That's something can also help with as well.
And so if you don't have good credit, or if you're just below the threshold, in an expert.
So that's what credit repair is. So you're leveraging those laws. You're going to the bureaus, going to the banks. You're saying, hey, this is inaccurate. Pretty much presenting your case. And then oftentimes, sometimes it's a process. Sometimes it can take, about 1 to 6 months. Keep after it, and you can get those negatives removed. So even if you're not there, even if you don't have good credit, the time's going to pass anyway. So you might as well start trying to fix it and work on it. Might as well start now, fix it, and then maybe a year from now, 2 years, however long, you'll be ready to get funding. I think it's like 40% or however many people like in the U.S. don't have good credit, or maybe it's lower. I think it's like 30%. So yeah, there's tons of people out there that definitely need help.
And if so many of them can just get past that threshold to start leveraging some of this business credit, they can migrate that debt from their personal credit into their businesses, which honestly is probably where it belongs anyways. I've been an entrepreneur for 10 years now. I have almost exclusively had my funds commingled. I have almost never separated my finances well, and a lot of the debt that I took on, or the expenses that I was going through, were business related. I just wasn't categorizing them. And so there's probably a lot of entrepreneurs out there that work very hard, that have a great product or a great service, that are great people, and just because they don't know how to stack or put these products together, they're not able to reflect that success or that leverage or lifestyle that they really deserve. So if that's you out there and you're wondering how to get past that threshold or that precipice, it's not just us. We've used it in real estate, but I've already watched Cade get funding for people across a wide spectrum to use these things. And get it. Get yourself the leverage. Get yourself the capital to work with, especially in today's world and today's economy. Use your power responsibly. That's up to you. You're adults. But I'm telling you, go get yourself some funds. Go get yourself fully funded. Yep, exactly.
So, all right. Well,
appreciate you, buddy.
yeah,
Thank you so
appreciate it.
much, man.
Thank you, Miss Janice. That was awesome.